Hey, this is Jeanette with Winery Solutions. If someone asked you right now, do you actually know what's in your QuickBooks inventory? Would you feel confident answering that? Now, most wineries I talk to would likely say no, because they either don't use the inventory function in QuickBooks or they flat out say, what I see doesn't make any sense. Now, today I want to walk you through the 3 inventory mistakes I see most often and why they make your numbers so hard to trust. Now, here's what I hear all the time. QuickBooks can't really handle inventory for a winery. And I get why it feels that way, because most small wineries aren't using the QuickBooks inventory function at all. You have spreadsheets, you have warehouse reports, you have an e-commerce program with its own inventory tracking. And this feels completely normal because it is. Almost everyone in the industry does it this way. Even your tax preparer probably says, just give me your inventory reports and I'll calculate your COGS at the end of the year. The problem is that approach leaves you waiting 12 months or more to find out what your wine actually costs you. And by then, it's too late to do anything with that information. QuickBooks can handle case goods inventory very well, but it has to be set up correctly. And when it's not, or when you're working around it, the errors don't stay in just one place. They spread into your COGS, into your margins, and your ability to make decisions. Now, here's the part most people don't realize. The QuickBooks inventory function isn't just for counting cases. It calculates your cost of goods sold automatically the moment you record a sale. Knowing how many cases you have on hand matters, but knowing how much money is tied up in that inventory and what it actually costs you when it sells, that's what drives pricing decisions, sales channel decisions, and cash flow decisions. That's what keeps the business on solid ground. And right now, with costs going up across the board, labor, materials, compliance, shipping, you cannot afford to be making decisions on a distorted picture. So let's talk about where things go wrong. Now, these are the 3 mistakes I see most often. The first mistake is inconsistent sales entry. Now let's head over to QuickBooks. This is the Inventory Valuation Summary Report. It's a standard report. You find it here under Reports, Inventory Valuation Summary. And this report shows you the number of bottles on hand, each bottle's cost, and the total value of the case goods down here at the bottom. Right there. Now, you could set up your file to show cases instead of bottles, but the key thing is, if your report doesn't look like this, it could be due to not using a consistent unit when you record a sale. So a lot of wineries create invoices for wholesale and distribution sales in QuickBooks, but sometimes you enter the wine by the bottle and sometimes by the case. And then DTC sales go through a point of sale or e-commerce program with its own completely separate workflow. Now, some owners try to solve this by running everything through the e-commerce program, but that doesn't work either. The entries still don't match QuickBooks. The count starts drifting, and before long, you've got a growing gap between what's in your cellar or the warehouse and what your system thinks is there. In a year when you need to know exactly what you have and what it's worth, that gap is a real problem. The second mistake is losing cases after a bottle run. Now, this one is sneaky. It's a long-standing tradition to give the bottling team some wine and then to set aside the first off and last off cases. But if those cases aren't accounted for correctly after bottling, they basically disappear into a bookkeeping black hole, physically in your cellar, but invisible to your accounting system. This creates phantom losses, incorrect COGS, and reports you can't rely on. Now, the third mistake is not tracking samples, pours, and gifts. Now, tasting room pours, distributor samples, promo bottles, all this matters when every case counts. And the wine industry is very generous with this stuff. Costco and Trader Joe's hand out samples too, but they're not pouring reserve Pinot Noir and sending you home with a bottle as a thank you. When the samples and pours aren't recorded, Your true COGS gets quietly distorted a little more each month. And all three of these mistakes head to the same place. Once inventory is off, nothing downstream is right. Your COGS are off, your margins are off, your pricing decisions are based on numbers that don't reflect reality. Now, if you recognize one of those just now, you're not alone. Doesn't mean your bookkeeper isn't doing their job. These problems are almost always traced back to a setup issue. Not a math problem, not a people problem. It's a structure problem. Fix the structure, and the numbers start telling the truth again. Your COGS becomes something you can actually act on each month, not once a year. And that's completely doable for any winery willing to get the structure right. If your inventory has felt like a question mark for a while, this is a good time to take a closer look. I have a free webinar coming up soon where I talk about problems and solutions for a small winery. The link to register is in the description below. And if you're ready to go deeper on QuickBooks setup for your winery, the Fundamental 5 is the first step in the path to profitability. That link is in the description below too. Thanks for watching. Cheers!